one thing I want to point out real quick is, when you're dealing with pivot levels and pivot points, they act as support and resistance basically. Pivot points are generated from the previous day's range, and as you can see, we're in the pivot point area. We didn't bounce right off the pivot point, but if you notice, there was some hesitation in the area, and we're just slightly below the pivot point. All right, pivot points allow us to anticipate prices. We don't get guarantees. You can't step in front of the pivot point. The next pivot point is 2920 area. All right, so that's the next place. Like if we fall apart, I mean, I'll look in this area, see how we do in the 30s, but if we fall below that, this is the level right here. This is the next level. Okay? So that helps you get perspective. Why do pivot points work? Well, because there are other traders that see the same line. So certain behaviors can happen there. So that's why I like to use them. That's why when I talk about levels a lot of time, I'm referring to the pivot point. All right, and each day they change. So just wanted to point that out. And also remember, pivot points don't represent exact prices. You may have a range of prices near the pivot point. Another important thing. A lot of people like to make the mistake where they'll step in front of the pivot point, because if you look historically, they work randomly. So some people are like, oh, they work, so they put a limit order right at the pivot point, and sometimes it works beautifully. But what you don't see are the times where it just blows right through, like that point is not even there. This is why the price action analysis is so important. The price action around the pivot points. If you just trade them just because you're at a pivot point, you're going to have random results. Okay? They're just a reference point, a range of prices. Alright, so just something to keep in mind when you're dealing with these pivot points.